I make over $50,000 every single month just by futures trading, and I've made well over $250,000 in verifiable profit and payouts. And that is all just by using this one simple zone that I learned. And I'm going to show you how you can implement it as well inside your trading. Okay, and before we get into these profits, I just want to frame who this video is for. This video for you if you're tired of blowing accounts, you cannot find a consistent strategy, you keep losing money inside the markets, and you're overall just not consistent at all. This video is exactly for you if you're dealing with any of those. So now let's get into the profits of my model. So right here we can see over 16 tops of payouts from Gmail, and then we can come over here and we can say over $15,000 in payouts right here, payout amount $5,000. We come over here, we have back to back, we have a $40,000 month right here, and then a $52,000 profit month. Right, we can see $70,000 profit trades, but then losing trade $17,000, which all in all leads to a profit of $52,000 in the month of June. Right, and then we can come here in the month of August, we can see a $40,000 month right here, and then we can come down here, and after all that, my model that I have is over an 86% winner, over 100 trades taken. So this strategy that I'm going to teach you right here is actually pretty fucking good. Now I'm sure you're probably questioning what is that confluence or zone, and that is going to be the fib retracement. What is the OTE zone? The OTE zone is when you take a low to the high, or vice versa. You take the high to the low, you take the low to the high right here. In this example, you take the wick to the wick, and sometimes it can be the body right there, but I usually just use the wick, and it can be, it's right here. It is the 618, 706, and 79 out of it. I can say for certain that this thing works really good. And then you have your 0.5 as the equilibrium, which price does pull back into that as well, but mainly I use the 618 for a bullish trend right here. And this is basically just manipulation legs, right? You can tell where price is going. Very good example right here. Let me show you. So as you can see, these are all over my charts because I use it so much, but right here would be a very good example, right? We always want to kind of extend it if there's no pullbacks. So right here, we can see we take the absolute high and we go to the low right here with these equal lows right here. And that is also way better because then you can also use that as a confluence, right? We can see we take the high to the low and we just tap into the 618 right here. We can see price perfectly tap into the 618, leading to go lower to down to these equal lows, which is also a, it's also a draw on liquidity to price. So this is obviously very clean. I'm going to go more in depth on this later. Okay, and right here we can see another very good example, and I think I actually believe I took this on an actual trade. So we took the high to the low right here, high to the low, and we could see like that is just straight up perfect, right? We take the high to the low and we see price, we came down right here, we mark our OT zone and see price cleanly tap into that 618 right there, perfect. Then immediately go lower after. That is perfect example of the OT zone coming in play. Now let's go over where do you actually put the OTE zone. Maybe you would think if you go on the higher time frame like this, you would put your OTE zone. Like, I mean, it can really be anywhere, but you really want to put it in kind of the zigzag moments or the swing highs and the swing lows like this. So a good example would be like this right here. So we can see right here, we see this low right here. This is a obvious swing low because we swung low. And we have a swing high because we swung low, swing high. Right here would be a perfect example. You can see we kind of respected it, right? It obviously went below the 718, but after it came into this, it obviously went up higher, and this is on the 1 hour time frame. So I wouldn't really say that's very respecting it, but this is a good example to put your OTE zone at. So we can see right here another very good example. We see a high right here, obvious swing high, and then an obvious swing low. So high, the low. So that is where we want to draw our first click. We want to draw it down into our second click right here. And this is the 1, this is 0, obviously. And it, just pulls all these numbers out. And this is where you want to see price pull back into. We can see right here, I took this trade right here in a real account. So we can see, yeah, we just mark out the high to the low. Price came into this zone, and obviously tapping into this zone, we needed to go lower into the probably a 50-minute Fibonacci gap down there, I believe it was, and also tapping into rejection, which is in my full strategy, but I teach that in my other videos. So what does this actually look like, right? So we can see a very good example right here. We see the 618, 706, and 79. This is just my full strategy, but I'm just going to go over the OTE zone in this one. So in an example where we see just a high, we take the low to the high, and I know these candles are not like good design, but it's hard to kind of do these, so I just had to do it like as quick as possible, right? We take the low to the high, and we can see after that we want to pull down. So let's just pretend all of this is deleted, right? Let's just pretend all that is deleted, right? We take the low to the high, and we get the 618, 706, and 79 out of it, right? And is now we want price to come down and pull back into this zone, right? We want price to come back down and pull into this zone, and then leading to go higher right after pulling into that zone, right? So we can see perfect example, yeah, right here. So after we marked out our low to the high, we see the 610, 706, and 79, which is the OTE zone. Pulled back into it, basically the consequent encroachment in the 706, and it went higher, right? And my full, just literal, very quick strategy breakdown. My full actual strategy is where you see rejection off of Ray gap while tapping the OT zone, and SMT is optimal. It's very good, but doesn't really have to be. And then obviously context and good draw on liquidities. And then we have an IPG right here, 1 minute after tapping into the Ray gap and OTE zone. So we can see a very good example right here. Let's take a bearish trend, right? So we take the high to the low, right? And then after we take the high to the low, we would get the 706. Let's be the 706, 709, and 618 right there. And then right after that, right here, I have the OTE zone sitting right here. So we'd want just price to come back and pull into this, and then leading to go lower. So I'm just going to kind of copy a candle. So let's say we come up, right? We come up. Let's say we tap into this. So we just tapped into the OTE zone, right? Now what? Obviously, what do we want now? We want price to go lower. So yeah, that'd just be something. Price to go lower. After that, usually tapping into a Fairvalue gap, which I use for drawing liquidities, but I haven't dropped the video on that actually yet. Soon I'm going to go over all the best drawn liquidities and everything, but let's stay focused on this one confluence that I use. But basically, just the overall concept that you want is you want to take the swing lows and the swing highs, and you want to mark them out like this, right? You can call it the manipulation leg, gold zone, or OTE zone. It doesn't really matter. But basically right here, yeah, we just mark out low, and we wait for price to come back into it. And when it taps into it going higher, we look for a reversion right there, right? And my strategy consists of Fairvalue gaps and SMT zones and IPGs inside of that. So let's get into more live market examples. So I'm just going to just scout it out with you guys right here. Just kind of more of a raw thing. So looking into this right here, you can obviously tell that in a future setup, I would probably say right here on the 50-minute time frame, it's right there. Because what do we see aligning right here? We see the OTE zone aligning, and we see some Fairvalue gaps. So that is obviously a good rejection zone. We want to see in the future we come in the higher time frame. So yeah, we just take this 15-minute, and for a good example, I want is price to come up, tap into this CE of the Fairvalue gap, while also tapping an OT zone, create an SMT probably with that high, and in a little 1 minute IFG like in there, and then where we go down with that Fairvalue gap, 15 minutes already filled. Probably just some equal lows if there's equal lows down here. There's irrelevant equal lows. There's some trend line liquidity though. Probably take that, right? So let's just do another real quick live example. I mean, no, this would not be one because yeah, I don't know what happened. This would not be one right here. Okay, we did tap the equilibrium of it, which is also pretty good. You can use the equilibrium. The 0.5 is it? Yeah, you can just tell it coming into play, right? We can see we conquer out a little to the high. Price easily came in, tapped in the equilibrium, and then went higher. Pretty simple. Simple as that, right? There's really not much you could learn other than this one thing right here. That would be, let's say you're taking out a swing high to a swing low, right? And we see, so yeah, price just comes up, swing high. This is what you have marked out, right? So now you would be wanting reversions or fucking price to come back into this, right? And let's say it taps into that. That is perfect. And let's say we tap into it and then we create a Fairvalue gap. And now all we're waiting is for price to inverse this Fairvalue gap. And if you don't understand, I'm going to link the video that I explain my whole strategy on at the end of this video. So if you want that, stay tuned. But yeah, basically you just want a 1 minute IPG and then continue to go higher like that. Simple. But let's say would be a bad example of trading the OT zone. Mark out the low to the high, right? And when we see price come back right down here and close below that, would you still use that in an OTE zone? The answer is no, because it's obvious that we're not respecting this OTE zone, right? We're not respecting it anymore. So what would be the point of using it? Because it's not in an OTE zone. It is not clear that we're respecting it. That'd be no trade, right? And some occasions you probably can, like if there was like a lower time frame, like something like this, maybe. Like if we come down and we like did that, or wait, no, that wouldn't shoot. It'd be this. Come down. Let's say we close below this, and then right here, right? And then we take our new OT zone like that, right? And let's say we're also tapping into like a Fairvalue gap like this while also creating an SMT. So now what we would want is you want price to come back, tap into this again. So that'd be a good example of not taking it, but also kind of reversing it into a good trade. But that's still very good. Like, obviously, that's a very good trade. But that's basically going to be the end, and hopefully you learned something. I will drop more videos on this soon because I'm just going to explain everything I know basically for free. So there will be more videos about this soon because I'm literally going to explain a lot inside this YouTube channel right here, Futures Core. I'm going to explain a lot about trading and how you can implement these same systems that hits me $50,000 a month, how you can implement it also as well. So hopefully you learned something from this video. I am going to link my strategy, and I also run a very private mentorship on the side, but I do not really accept everyone inside of it because I like a high success rate with my clients, and it's essentially where I just dare them to six figures. But once again, I do not accept everyone, so if that's something you'd be interested into applying, DM me on Instagram mentor and I'll reach out to see if I could help potentially. But once again, it is very private. We will have to go through application stuff, hop on a call, and if you like to schedule a call, then you can schedule a call. But other than that, I'm going to link the YouTube video, and hopefully you learned something, and peace.